Ladies and gentlemen, good day and welcome to the Alembic Pharmaceuticals Limited discussion on company's Q2 H1 FY23 financial results. We have with us today Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director Finance and CFO, Mr. Mitanshu Shah, Head Finance, Mr. Jaisal Shah, Head Strategy, and Mr. Ajay Kumar Desai, Senior VP Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti, Director Finance and CFO. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining the Alembic Pharma's second quarter results conference call. I know it has been a hectic day for you. A couple of pharma companies announced their results today. So I will be short today. Let me briefly take you through the numbers for quarter ended and half year ended 30th of September, though most of you might have received it by now. During the quarter, our total revenue was up by 14% to 1,475 crores, 1,475 crores. EBITDA was 231 crores. Net profit was 230 crores, 33 crores. EBITDA margin for the quarter was 16 crore. For H1 FY23, the numbers are EBITDA 240 crores and net profit 67 crores. You are aware that in Q1 we wrote off significant amount of amortized R&D expense of Aleor, the company which has been now merged with Alembic Pharmaceuticals. We continue to do that, and in this quarter, that is Q2, we have expensed out 16 crore rupees out of previously amortized R&D cost, and so that makes it 131 crores of charge off for the half year. If you would not have done that, our profit before tax would have been higher by 131 crore, and profit after tax would have been higher by 108 crores. That is for the half year. Residual intangible assets and books pertaining to Aleor operations are still 24 crore. We hope in next couple of quarters we will clean it up. Our consolidated profit before tax, I said that. EBITDA on likewise basis would have been 338 crore without charging of the one-time expense. That would have been 12% of sales. This is for H1. EPS for the quarter before non-recurring item is at 7.09 per share versus 8.34 of previous year, and for H1 it is 8.93 versus 16.39 of previous year. Coming to borrowings, our gross borrowings are 693 crores versus 630 crores in March 2022, and we have 65 crores of cash in hand. March 22 was almost identical amount of 61 crores. So net debt equity stands still very comfortable level 0.13. I will request Shaunak to take you through India branded business. Shaunak, over to you.
Yeah. So good evening, everybody. This quarter for the India business, the top line was 8%, which reflects us to be in line with the industry. As per last year, we did have a large sale of amphotericin B, primarily deal with COVID-related fungal infections as a service. So we did launch that. If I were to take that out, our growth jumps to 11%. Within this growth, Both specialty as well as acute gave a good double-digit growth with 10% in specialty, largely driven by gynecology, anti-diabetics, and ophthalmology as the outperforming specialty areas. And the balance of the growth is driven by the acute, which is growing at 11%. Along with that, our animal healthcare business continues to show a strong run of performance, clocking in 15% growth for this quarter. The growth for this quarter as an organization was in line with the industry and with the IMS numbers. And if I were to take our primary numbers versus the IMS numbers, we do continue our degree of outperformance, though the degree is a lot smaller. That being said, I think going forward, we continue to maintain and we're extremely confident of outperforming the market growth numbers on a consistent basis. With over time, we wish to reach significant outperformance versus market growth numbers or on a moving trend. So that we maintain. This hand it over to Pranav now for his presentation on the international side.
Thanks, Shona. It was an interesting quarter for the international business, especially the ex-US and API business both had a decent quarter, especially considering that they're coming off a high base of last year. The US business continues to remain challenging and a lot of oversupply in the market and a lot of price erosion due to that. In spite of that, we managed to grow the business by 20% in the quarter. This was due to some one-time opportunities that we had in the market. The sales for the current quarter in the US was 52 million. We continue to remain focused on this on the long term of the US business. We do have, we've announced in the market, that we got first of our 2 injectable sites approved. We got 3 approvals from the sites. The site approval is pending, but product approvals have started flowing in. So that is promising. Our R&D expense is 168 crores. If you see X of the one-time Allure products R&D charge-off, it is 151 crores, which is 10% of sales in the quarter. We've been guiding for low R&D in the future, and this is a trend that we will see moving forward as well. We filed 5 ANDAs during the quarter, and cumulative ANDA filings are 242. We also received 3 approvals during the quarter. We launched 5 products in the US during the quarter, and hopefully we'll launch another 10 at least in the rest of the year. The US FDA, as I mentioned, had conducted an inspection at our injectable facility F3, where we had 2 observations, and at F2, our oncology facility, which had 4 observations. But as I said earlier, we've started receiving product approvals from these facilities, so that is promising. The US generics grew by 20%. The ex-US generics grew by 9%, whereas the API business had a very good performance and grew at 23%. I'll open the floor for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press *1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press * and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Kindly press *1 to ask a question. The first question is from the line of Prakash Agarwal from Axis Capital. Kindly proceed.
Yeah, hi. Thanks for the opportunity. Good evening to all. First question is on the expenses side. Quite a bit of cost control here. Wanted to understand what is the capitalized cost sitting for all the facilities put together, and given that you have received approval, I'm sure you're launching soon, if not already. And how would the cost start to go up from here?
So the capitalized cost is 1100 crores for all the 3 plants, F2, F3 and F4. Yearly spend is around 200 odd crores, the revenue expenditure, and once we capitalize and put plant to use, for F2 and F3, this cost would be in vicinity of 300 crore rupees, including depreciation.
Yearly you said 200 crore. I heard that, and then 300 crore.
Yeah, with depreciation, 300 crores.
Put together.
Yes.
And yearly 200 crore for all the 4 facilities.
That's true.
Okay. No, I was asking, going forward, what is the kind of expenses we should start penning in, given the approval and launches will start from the injectable plant?
So, Prakash, this is exactly what I said. Keep aside F4. Let's take F2 and F3. Then the running cost is around 160, 170 crores, which is like a cash burnout. Okay, that's overhead. And then you have to add another 100 crores on as depreciation.
Understood. So of the 200, 160 is for the first 2 plants. Is that what I was trying to say?
Yes.
Understood. Okay, fair enough. And yeah, congrats on the the approval that has started. Just trying to understand for the opportunities. Juice is still left on these products, and when do you plan to launch them?
So we will probably launch in Q4 of this year. In terms of Ketorolac, yes, I think while there are people in the market, but it continues to remain in shortage on and off. So there would be an opportunity to get some share. Paclitaxel is also large volume, so that is also an interesting product on the oncology side. Right now we're seeing some shortages in few SKUs of paclitaxel as well. And the third is glycopyrrolate. That also is a smaller product, which would be interesting.
And we should start seeing more, the kind of filings you've done would range. In the past you have mentioned that to start with it would be smaller and basic products, but you would have complexity going ahead. So when should we start seeing the complex product approvals? Or they are still in the filing stage?
I'm just soaking in the pleasure. At least the approvals have started, Prakash. But I think few things. Yes, we do have some interesting products. Hopefully in another 6 months or 12 months, we should see some interesting ones. A lot of the other filings are also going on. A lot of our filings got delayed this last 12 months due to the FDA remediation. So hopefully that pace will also pick up some.
Okay, perfect. Great. Thank you and all the best.
Thank you. Participants, if you wish to ask a question, please press star 1. The next question is from the line of Sumit Gupta from Motilal Oswal. Kindly proceed.
Hey, hi. Thank you for the opportunity. I would like to know the outlook on the US generics, like what kind of price erosion that you are witnessing.
So the US business is the most competitive I've seen it, at least in the last 10 years or so. There's a lot of oversupply in the market. I don't know what the blended price erosion would be for the portfolio. I'm assuming it'll be high teens. But product-wise, if we see, I'm seeing erosion of upwards of 30% product-wise in specific products.
Okay, sir. Thank you.
Thank you. Participants, you may kindly press star 1 to ask a question. The next question is from the line of Bharat Sali from Equirus Securities. Kindly proceed.
Yeah, hi. Thanks for the opportunity and good evening, everyone. So, sir, just wanted to understand, since we have already started getting approval from the new facilities, so just wanted to get a color how many ANDAs are pending approval from F2 and F3 injectable facilities lastly.
You got 34 filings actually between these two facilities, and then we got another 17 odd filings from the CMO, which eventually we will bring it to these facilities. So 50 odd at this point in time.
And this 50 includes onco oral as well, or it is just injectable?
Yes, it does. It does.
Sorry, I didn't get it.
Yes, it does. It does cover onco.
Okay. So if I just talk about the injectables, not oral solids, so how many products that would be?
So we have around 7-8 filings for OSD onco.
Okay. So large part is injectable in that case.
Yeah.
Is it correct?
Yes.
Okay. And second, on the overall US pricing, so are you seeing that the overall pricing pressures have started cooling off from the quarterly perspective, quarter-on-quarter perspective? I believe year-on-year it may look still high, but on quarter-on-quarter basis, are you seeing some cool down?
I mean, not really, to be honest. As I mentioned, where even quarter-on-quarter basis, we are seeing price erosion compared to last year. It's just there's too much supply in the market. So even quarter-on-quarter, we are seeing price erosion.
Right. And last one from my end. So we have even settled for Revlimid. So what are the timelines for us to launch? If you could give some color, whether it is FY24 launch or whether 25, if you can give some color.
We are not in the first or second wave for Revlimid, so we are way behind. I think Revlimid is very low for us. We were late to the game.
Okay. Thank you and best of luck.
Okay.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Sumit Gupta from Motilal Oswal. Kindly proceed.
Thanks again. I would like to know about the Brovana, which was commercialized. What kind of traction that you are seeing?
Yeah, so this is a product we commercialized. It's through a CMO. We've gradually been picking up share. It's a good market still, and we've picked up some share. I think we must be about 10% or so market share right now.
Okay. So can you guide what kind of market share is there? Or what is the market size?
I don't have that figure with me on hand. I'll have to just double check and get back to you.
Okay, sir. Thank you.
Thank you. The next question is from the line of Jainil Shah from JM Financial. Kindly proceed.
Good evening. Thank you for the opportunity. I just want to ask on the API front. We've grown really well. So what is driving this growth and how should we look at it going forward?
Yeah, so the API business, it's been a good business for us. I think we've focused on quality and timelines kind of thing. And as the world is looking at more better suppliers with compliant facilities, so we've been able to do that with our service levels. I've mentioned earlier in the year or everywhere, so we expect the API business to grow about 10% during the year. This was an exceptionally high quarter where we had about 23% growth. But yeah, I think 10% is a fair enough growth as expected in the API business.
And on the US front, you did mention that there were certain one-time opportunities. So, X of that, what would be our sustainable, US-based business run rate?
So, as I've said in the calls earlier, about 45 to 50 million, anywhere between that is a sustainable US run rate. It really depends if we lose out an award or what we get or how the pricing behaves. But 45 to 50 is what I'm seeing currently.
And when, in your view, it could change and we could move to a higher base of 55, 60?
Yeah, it's a good question. I hope we can go soon, but I think it's going to take some time. I think only way it will happen is as we get more products in the market and slowly get market-based opportunities once some of the injectables come in. That's the second thing. Thirdly, if there's disruptions in the market, right? As I've been saying, there's a lot of supply in the market currently, but we may see some disruptions going forward. Once that happens, then it'll be opportunity for some price. You can get some little better prices and some market share as well. So I'll say a couple of quarters at least, it'll be stable.
Yeah. Thank you so much. Yeah.
Thank you. The next question is from the line of Nikhil Mathur from HDFC Mutual Fund. Kindly proceed.
Yeah, hi. Good evening. Sorry, I have joined late, so I'm not sure if this question has been asked. So now we are seeing some products getting approved from the onco injectables facility. So does that mean that some part of OPEX and depreciation which was capitalized starts hitting the P&L from 3Q onwards?
Yeah, so once we start taking the first commercial batch, that would be the due date. On that, we won't capitalize it, and it would be part of expenses. So we can expect that to happen by Q4.
By Q4. Okay. And in the last call, the numbers it mentioned that were in the P&L around 180-200 crores was on the OPEX side, and I think 150 odd crore on the depreciation side, or 180 odd crore on the depreciation side. Are these numbers right? Am I looking at the right number there? Though I think the build-up will be a bit more steady than everything coming at one go.
Yeah, Nikhil, that one was for all the three plants, F2, F3, and F4, actually. So somebody has just asked, Prakash asked this question, that was the first question, I'll, for the sake of repetition, I'll still do it. It was, for these two plants, the expenditure is around 160, 170 crores, which is a cash burn, and then 100 crores of depreciation for these two plants.
Understood. And also, do you mind commenting on, I don't know, you might have shared it, but if you can reiterate it, what is the R&D outlook? What is the spend on a quarterly basis that we are looking at from here on?
So the R&D outlook, this quarter, the total R&D was 168 crores, which includes the Aleor term. As I mentioned in the start of the year, we will get to an R&D about 650 odd crores this year, including the Aleor R&D. And then it'll be flat, or we'll try reducing it a little bit going forward as well.
Okay. Got it. And one final question. India has done well on a pretty strong adverse base. I mean, 23% growth was there last year, same quarter. This quarter is 8% growth. Are there the usual products that are there in the portfolio? Some new products are picking up, and that is contributing to this growth that has been recorded?
It's a combination of both. On the acute side, we have had some of obviously the traditional brands have done well despite the markets being quite flat, based on all the brand building efforts we put in the last 1 year. On the specialty side, yes, the traditional portfolio also has done well, but there have been some very good launches in the gynecology space for us, along with a couple of good launches in the anti-diabetic space. It's a combination of both that's driving it.
Okay. And there will be usual seasonality in second half, right? Wherein 3Q and 4Q would be weaker than 2Q. I mean, the normal seasonality that happens in your portfolio in India.
Yeah. So historically, yes. Traditionally, Q2 is the highest in terms of phasing. But I think more and more with the weather patterns and the climate changing, and also with delayed monsoons, I think these trends are changing where Q2 and Q3 seem to be almost blending into each other per se. So yes, there is a bias in Q2, but not as pronounced as it used to be.
Okay, understood. Thank you very much.
So Shaunak, as our revenue percentage from specialty segments are going up, the impact on us, on Alembic Pharma, the seasonal impact is now gradually would go down.
Yeah.
Sure, sir. Understood. Thank you so much for this.
Thank you. The next question is from the line of Cinderella Carvalho from JM Financial. Kindly proceed.
Opportunity. So if we look at the other expenses for this quarter, is there any kind of one-off, or is there any kind of additional spend which has come only in this quarter? And do we see the opportunity to have some rationalization in this number going ahead?
So except the 16 crore which I said we charged in this quarter, which was out of previously amortized R&D expense of Aleor, there is nothing one-off. And this quarter numbers are okay. I mean, I don't think there is any exceptional debits or high number.
Any scope to improve it further, sir?
As Pranav said, I mean that effort to contain expenses continues. The particular area of focus at this moment is of course R&D, but it takes time because when you evaluate projects, you decide what to continue, what to drop. Even when you decide to downsize, it takes time. So it's a process that doesn't happen overnight, but we are constantly at it.
Any quantum that we would like to specify over a year, any certain amount that we would expect due to these activities?
So on an annualized basis, I think we plan to save about 100 crore rupees this year versus what we spent last year.
Okay. And sir, if we look at the domestic business, you did mention that the seasonality will be not the factor going ahead. So how is the chronic segment doing? And how should we?
Shaunak would respond. I didn't say that there is no impact. I said that impact now is getting diluted because our specialty business is showing more number as a percentage of business, but of course we still have about 35% of the business from acute, so there will be some impact. But Shaunak, would you like to talk about the specialty business growth?
Yeah, so I think for this quarter, I think I mentioned on the call, I think the specialty overall we recorded, I think, 11% growth. Going forward, I expect this to significantly ramp up, especially because I think in the CBD space, we've had quite a few new launches, and some of these new launches are diverted focus from our traditional brands. So a little bit of that has happened in that process. But like I said, I've always maintained, I think our specialty business could be clocking in a very strong double-digit growth, more or less, assuming the market doesn't turn into a very low growth kind of situation.
Any new products that you see apart from what we've discussed?
Yeah, so I think we've had a couple of launches in the gynecology space, and we've had a couple of launches in the diabetology space. So, but these are not launched in this quarter. These are both most of these products were launched over the last 6 months.
That's helpful. And if we can get some more detail on the API segment, which products are these which are doing well?
It's tough to give a difference by each product. There's no particular product per se, but the entire basket, because we sell the basket across territories, and no particular territory also. We've seen very good growth across all the territories all over the world that we sell in.
Any particular therapy that you can highlight? If not,
API, we don't go by therapy-wise. We just go by what makes commercial sense and what our capabilities are.
Okay. And any benefit of raw material easing or logistic cost easing that we see which would flow in coming quarters?
No, not at all. Actually, logistics costs have been pretty high, and we're not seeing any easing of that as yet.
Even on the raw material side, it's a similar scenario?
Yeah, and there's no easing on any of the costs.
Okay. Thank you so much. All the best.
Thank you. The next question is from the line of Bhagwan Chaudhary from Sunidhi Securities. Kindly proceed.
Yeah, thanks for the opportunity. Sir, how many filings we have done from the F4, and when do we expect this facility to get the approval from US FDA side?
F4 is another oral solid OSD facility. We have done 2 site transfers and 1 filing from F4. So we'll wait until FDA comes to audit, and then we'll add more products over there.
And so in terms of F2 and F3, do we have the filings in EU and other countries than the US?
No, not as yet. Our goal is to do some filings for these 2, but priority was first to take on the US, which we've done, and now we'll extend it to other territories as well.
When we got the approval, this Mesalamine franchisee, can you please share what is the market opportunity and size for this product, and have we launched it?
No, we haven't launched it as yet. Volume-wise, it's not a very large product. There's, I think, about 6, 7 people already in the market, but it's an interesting opportunity, and we will launch it in Q4.
So lastly, have we filed or have we get any approval on the derma and ophtho? And if not yet, by what time we can expect?
No, derma we've already got. We've got about good 15 odd products which have got approved from the derma facility and which are already commercialized, which we're already selling in the market. Even ophthalmic, we've got about 10 to 15 ophthalmic products which are approved. These, of course, the first phase of ophthalmic were all filed from a CMO, not from our own facility. But even from our own facility, we have some filings which hopefully in the next 2 quarters we will see some approvals coming from there as well.
And this Derma is from the F1?
No, so Derma is a separate, because Derma was a separate company earlier, Allure, which we amalgamated, so it's from that facility. So we don't call it F120, it's just called Allure.
And for Ophtho, this is from which facility?
And that is from, I said a CMO. So contract manufacturing.
Our own line is F3.
Okay.
Ophthalm is F3.
Okay, got it. Thank you.
Thank you. The next question is from the line of Puneet Pujara from IIFL Securities. Kindly proceed.
Hi, thanks for taking my question. So I have a couple of questions, starting with pre-operative expenses. So how much of this 1100 crore would pertain to F2 and F3, which will charge to PNL once the facilities are commercialized?
Yeah, so almost 950 crores pertain to F2 and F3.
Thanks, that's helpful. Now we saw some good growth in our anti-diabetes franchise in India. So I believe we have launched sitagliptin after the patent expiry. So how has been the traction so far, and can you speak a little bit about market formation?
Sitagliptin is, it's too early. It's just been launched. I think it's hard to give you an indication at this point in time. But I think we've launched it and we're getting good traction. But I would honestly like to comment on market formation, maybe a quarter down the road, because it's literally in like 1 or 2 months is very hard to kind of gauge what's going on, because most of the Sita and the Sita combos were launched in the last quarter only. End of last quarter, current quarter.
Sure. And gynec therapy has also done well. So do we have any launch of dydrogestro product?
Yeah, we already have a brand in the market. We were as the second part of the second phase that launched Dydro. Of the current launches of that second phase launches, we already reached number 4th rank, and we're getting tremendous traction on it, and we're quite confident of building it because of our leadership position in gynecology as a therapy area. We're getting extremely strong traction, and we continue to keep building in the therapeutic space, in this product, sorry.
Sure. So given that dydrogestro and sitagliptin, both the products were launched a few months down the line after the patent expiry, so do we intend to launch sacubitril valsartan after the patent expiry coming over the next few months?
Sorry, could you repeat the question?
Yeah. So given that we have launched dydrogestro and sitagliptin after the patent expiry, I understand that we are targeting molecules that go off patent. Do we intend to launch sacubitril valsartan, which is heart failure therapy, after the patent expiry?
Sacubitril combo we are planning to launch, and we're quite gung-ho on it. The challenge with valsartan sacubitril is only that there are multiple SKUs in this product. So it's not a single product launch, but we're gearing up for that. I think we'll be ready to launch in a dedicated manner. I think immediately on expiry, we're ready to launch all the SKUs.
And do we intend to expand field force to support these launches?
Yeah. So I think at this point in time, from the existing divisions, we have limited space now remaining with the amount of new launches we've done. At this point in time, for valsartan sacubitril, we are looking at a specialized task force just to launch this product, looking at the unique specialty nature of it, as well as the biasness and as well as the opportunity that it puts forward. So yes, we will be launching a fourth division, which will be like a task force to launch valsartan sacubitril, and more so to address the whole heart failure market.
Would you like to quantify the number?
I'll let you know next time when we meet post-launch.
Sure. And given that the peers are commenting that freight costs have been moderating, so our comments suggest that it is not the case. So it is because of the mix of air freighting and sea, or is it something else going on?
I think this is from international point, right? Not from domestic.
Yeah, like, I mean, bulk of our shipments are sea shipments, but, we have seen a major cost escalation on the sea shipments for last 5 quarters now, and, that's not taken the time, and, it continues to be at a very, very high level.
But from the current quarter, the container costs should moderate, right? I mean, some of the peers have indicated that's why.
Very mild, reduction. But, if you see what was there 7 quarters back and today, I mean, there is no comparison. It's still very, very high.
Sure, that's helpful. And the last question is on the US side. So given that we got approval for generic Apriso, which is a mesalamine product, so are we in the process of developing stroke filing Asacol HD or Pentasa? Both are very limited competition products.
Asacol HD.
And Pentasa.
We don't really disclose any of our filing grid, what we are or we aren't filing. So, I mean, if we get approval, then we have it.
So, without putting any name, do we intend to file any other mesalamine product like, say, Lialda, Apriso, Asacol?
Evaluating products, and if it's an interesting opportunity, we'll file. And by then, if it's still an interesting opportunity, we'll file. If there's more competition, we may not.
Mm-hmm. Sure. That's helpful. That's it from myself. I'll join later. Thank you.
So, coordinator, I think there are no new questionnaires. There are some follow-up questions which I think Mitanshu can take up with them separately. There are no new questions on the board. We can conclude the call.
All right, sir. There are no new questions in the queue right now. I would now like to hand the conference over to Mr. R.K. Baheti, Director Finance and CFO, for closing comments.
Yeah, thanks. I can understand little lesser number of questions this time because it's a Friday evening and guys have attended almost multiple calls. But thank you at the same time. I mean, for all of you who have joined, and interesting session. And I think look forward to seeing interacting with all of you next quarter. Thank you.
Thank you. On behalf of Alembic Pharmaceuticals Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.